What's up, everyone? It's Matty from Logikfx. I'm just bringing you the analysis of this week, which will be the fundamental Forex analysis on the EURZAR Forex pair. A lot of you out there will realize that the EURZAR Forex pair is actually an exotic one. What you'll tend to see in this currency pair is that there'll be much higher spreads and costs when trading it, but the volatility within the asset itself is actually much higher, so it has the higher potential gains when the opportunity arises. So when we're jumping straight into the analysis, as a Logikfx trader, as a Lita trader, our very most fundamental step is checking our Forex macro currency strength meter, and that's what we've developed here at Logikfx. We've compiled loads of economic data for you, and we've actually made that into an indicator to you for you to use to make everything so much easier. So just looking at the indicator itself over the past week, what can we identify? Well, at the start of last week, on the 23rd of June, both the euro and the ZAR were in a negative range. They were both below zero, meaning that the euro and the ZAR were actually fundamentally weak. But as the week went on, the ZAR became a lot weaker. So on the 30th, it weakened by 30 points. The euro started to gain some traction. It dipped back down, but on the 4th of July, so this week, the euro actually increased its points by over 50, and this actually pushed it into a positive strengthening phase and a fundamentally strong currency moving forwards, whereas the ZAR maintained a weak currency, a weak fundamental economic outlook in the future. And that's helped us filter out all the currency pairs in the market and choose and focus on the EURZAR to analyze. And that's what we've done today here at Logikfx. I actually posted a blog post about this yesterday, an article discussing the analysis, but I'm just going to go over in a video exactly my whole thought process on what's going on. So the EURZAR currently at a positive score of just over 20. I believe it's like 27. The ZAR is at minus 30, which gives us a really strong domestic outlook on the economic data. Now, as we move forwards, I actually summarized the data for you. So on a relative scale, we were also fundamentally strong for the euro, and we were also fundamentally weak on the ZAR. And this is really good because on a fundamental level, on a relative basis, the EURZAR is strong, and also on a domestic singular basis, the EURZAR is strong. So if you've gone through the masterclass that we have, you'll understand exactly what I mean by this, and that actually creates the highest probability trades when looking at the markets on a fundamental perspective using this particular system and strategy. So, in the analysis, what did I include? Well, EURZAR is an interesting currency pair, and a lot of you out there, you probably don't trade it, but as you get used to trading Forex, you'll actually tend to move towards these exotic pairs because that's where a lot of opportunity arises, and that's where you'll actually see a lot of trending movements, especially against weaker currencies. So in the analysis, I've included the GDP growth rates. In the import and export analysis, I've chosen three key indicators, and those are being BMW, the car company, Volkswagen, the car company, and the commodity gold. Now, all these have a positive correlation on EURZAR, which makes this really important indicator to analyze, and I'll go into the details later in a second. I also discussed the interest rate differentials between the two countries, and then the stock performance on the Euro stocks, which I've also discussed in previous videos. So why did I actually choose to include car manufacturers? Well, car manufacturers are actually a huge contributor towards South African GDP. So according to the National Association of Automobile Manufacturers in South Africa, the motor industry itself contributes 6.8% to the country's GDP rates. And that's the reason we've chosen to include BMW in the Forex analysis, because at the end of 2015, BMW actually announced they were going to start producing their X3 vehicles within South Africa. And on top of this, Volkswagen have been manufacturing their Polo models for almost 24 years in South Africa. And as you can see, in 2019, when they produced over 200,000 cars, 150,000 of those cars were actually exported, and only 40,000 were domestically bought. And it just goes to show that South Africa are no longer just known for their natural resources, their mining, their gold, diamonds, platinum. They're starting to pick up production. Their industrial production lines are starting to pick up, and it's essentially things we need to start considering and be adaptive towards the market. So what are the GDP differentials saying? Well, if you look at the chart, the GDP differentials are very interesting. You'll tend to see that there's a 16% correlation between the two, and obviously that's a reason being the GDP is actually a lagging indicator towards currency exchange rates. So what you'll tend to see is the currency exchange rate move first, but then the GDP tends to follow on a future date. And you can kind of get a rough idea of that already happening over here. So as the exchange rate goes up, the GDP differential goes up in the future. When it goes down, the GDP differential goes down in the future. And what we've identified actually with the differentials, there are actually some very extreme points in the charts. So when the differentials, the blue line, goes to -4%, the GDP growth rates actually tend to bounce back in favour of the euro and against the ZAR. But when it hits positive 2%, they tend to contract. And that's very interesting because recently in about 2015, 2016, there was actually GDP growth rate differentials actually did hit that 2% mark, and it did actually start to contract slightly. The reason this blue line is all the way up here is actually because we've actually included a forecast for quarter 2 of 2021, and in that quarter it is expected of a GDP differential of 8%. Main reason being the European area is looking to actually start growing considerably more as this COVID-19 thing starts to, dissipate. And that's the reason why actually the GDP differentials, we're giving that a long bias overall. There might be a short-term, retracement, but in the long term, we're still looking for this upwards trend to continue. As you can see, the ZAR is completely weak against the euro. It's literally been uptrending since 1995. So over a good 15 years, over a good 20, 30 years, this currency pair has been uptrending. And what does the BMW look like against the EURZAR? Well, as we've included it and as we've discussed why it's important, we can actually see that there's a 63% positive correlation between BMW and EURZAR. So it's actually a really good leading indicator on whether or not the EURZAR will appreciate or depreciate in the future. Recently, there's been a 3% increase in BMW share prices, which could possibly equate to EURZAR also appreciating in the future because of those exchange rate relationships. When BMW are exporting and importing their parts, they need to actually exchange currencies to do that, and that affects the currency exchange rate. It's why it's really important to include these massive companies in the analysis. What about Volkswagen? Volkswagen is another similar story. As you can see, the charts are very, very similar. There's a 53% correlation with the Volkswagen price against the EURZAR, and there's been a similar growth rate of 2.41% of Volkswagen. Volkswagen's also at a technical support level, which could potentially mean it's going to uptrend again, because overall it kind of has been uptrending since the 2008 financial crisis, been going up, slight retracement in 2015, going up again. If we see this trend to continue, again, just like BMW, just like the long-term trend of EURZAR that's continuing to happen, we're likely to see the EURZAR appreciate. And actually, when I move on to the price analysis, you'll see how much it's already moved since I released this analysis. So, EURZAR versus gold. I've only included data from 2009, but this data goes all the way back to 1995, and it actually has an insanely good positive correlation of 78%. So 78% of the time, as gold went up, so did the EURZAR. And it's a great leading indicator of predicting the future prices of the ZAR. Because remember, South Africa are known for their mining industries. They're known for the exporting of gold. And you need to include it because it's a commodity floating currency. And you need to include the commodities and the companies within the analysis if you want a great chance at forecasting these currency pairs, as they give you the greatest returns within the Forex market. But as you can see from the gold price in the orange, I've actually got a red dotted line here to show you. Gold's reached an all-time high. And what happens at all-time highs normally? Well, we tend to see investors start panicking. At all-time highs, investors don't really buy the asset because they think it's too expensive. So you tend to see the asset prices go down. At all-time highs, investors who bought lower down tend to get out because they think that's a potential time to get a great return on their investments. What does that mean for the analysis? Well, what it could potentially mean is that gold may or may not congest at this level again, just like it did back in 2011. But due to the COVID-19 situation, it's actually very likely that gold prices will appreciate, and it will appreciate even further, and it'll actually break new highs moving forwards. It's very likely to hit the 1900 mark, 1900 price on gold. And I would not be surprised if that's been hit, especially because of the risk on, risk off relationship with investors. When the environment on the financial markets is risky, what do investors tend to do? Well, investors seek out safer assets. And what are safer assets? Well, on a psychological level, gold is known as a safe asset. It's been traded throughout time, way back medieval times, when they're carrying buckets of gold, chests of gold, all those things. Gold throughout time has been seen as a safe asset, similar to some certain properties are seen as safer assets. Bonds are seen as safer assets because they're backed by governments. All these type of assets tend to appreciate in price when there's a risk-off environment. But when people are risk-on, when they're taking on more risk, you tend to see these asset prices drop, just like you did in 2011. So that was a risk-off scenario between 2011 and 2015. And then risk-on started again between 2016 and 2020. It's been going up. People taking on less risk. And due to the whole COVID thing, definitely we're going to see this risk-off environment continue until there's a vaccine made and until that vaccine can be distributed throughout the world. So what about the interest rate differentials between EURZAR? I've actually made a typo here. It should be EURZAR versus interest rate differentials. As you can see, the EURZAR's in orange. I just forgot to change that title. But an interesting relationship between the interest rate differentials is that as the blue line increases, so that's the interest rate differentials, even though it's in a minus percentage, the differentials have been tightening. They've been heading towards that zero mark, and that has shown in the exchange rate. We've got a trend line here, the red trend line showing that overall the data is trending up. That's what it's proving. And it's also proving that the EURZAR is actually respecting that. Recently, there's been a slight blip. It's been slowing down slightly, but we'll likely see this, interest rate differential tighten even further, especially if South Africa's central banks continue to reduce their interest rates. We may even see Europe, their interest rates increase potentially not. They're already at zero. They can go to minus if they follow the likes of Japan and countries like Switzerland. But we'll see in the future if these interest rate differentials tighten. It's definitely something to look out for in the analysis, because recently there's been a minus 0.25% change in the differential. So we have actually marked this as quite a negligible score. It's quite a neutral score. But if the trend continues, if the uptrend in the differentials does continue, it's definitely something that we want to consider in the long term for EURZAR. So moving on to the Euro Stoxx 50 against the EURZAR as well, we have a literally inverse relationship, directly inverse. It's like a mirror between the two assets. So as the Euro Stoxx goes down, EURZAR goes up. And it's literally a mirror. You can see that. In 2009, Euro Stoxx was at an all-time high of 300, I believe. That's priced in ZAR, and it dropped all the way down to 150 here. But in the same period, the exchange rate for the EURZAR went from around 11 all the way now to 19. That's a massive change. Imagine the pips on that. 11 to 19 on an exchange rate. It's moved a whole 8 points. That's ridiculous. Imagine encapsulating that trend, and that's what we want to get in on. We want to continue this trend. We want to see if this trend does continue or not with the analysis we're doing. And if we do get the opportunity to get in on this trend, it might be one to hold in on, potentially scale in. Who knows? We'll see in the future. So after all that fundamental analysis, we did realize that on the EURZAR, the fundamentals were saying, right, this can be a potentially good time to get in on this trade. But we really want to just time this properly, because the last thing we want to do is, be right on the idea, but get in on the trade and get stopped out. So we want to time ourselves properly. And to time ourselves properly, we want to use the COT sentiment, and we want to use a bit of price chart analysis, technicals, a little bit of that stuff. So on a COT sentiment level, what are the hedge funds doing for the euro? This is a little bit different. If you don't know how to make the COT indicator, there'll be a link here. All our Lita members get automatic COT indicators, so you don't have to worry about that. But I'm just showing you how to do this on Excel as well. And during the whole of the year, the hedge funds were actually in a net open interest short position for the euro. This is for the euro. And between the 12th of February and the 13th of March, the hedge funds started decreasing their short positions. So that means the hedge funds started to long the euro. It's not overall a net long bias yet, but it's very close. As you can see, look how close it is to the zero mark. If this hedge fund sentiment goes up towards positive, this positive mark around here, that's a great indicator for us on the EURZAR position, because that means we have now the opportunity to be with the market on this long trending position. Because if we look at the South African Rand analysis, as you can see, hedge funds have been shorting this currency for the majority of the year. And just recently in June, and June to July, hedge funds have started shorting it again. So that's a great sign for us for this EURZAR position. Ideally, we want the hedge funds to be longing this, but we could be predicting that EURZAR long position just from our fundamental analysis. So on a sentiment level, we're a net neutral bias, but on a fundamental level, we're on a positive long bias. So we could actually be predicting that hedge funds are already starting to long this, because remember, hedge fund positioning is actually a little bit delayed by just over a week. And our fundamental analysis is essentially predicting what's going to happen. So what about the price charts? Well, I've got a few charts here, and I'm going to discuss them actually on TradingView just now. So this is a weekly time frame right now, and there's a few points on this chart that are very interesting. One being the high in 2016 of around 18.9, so about 19 just about. The EURZAR hit an all-time high, and it retraced all the way down to about 14, the 14 level down here. Now, what has happened since 2017 is that since 2017 it's been uptrending throughout the whole period, and it just literally smashed the all-time high at 18.9. It's broken that high, it's retraced back down, and now potentially this level is being used as a support again. And what we've identified is another key point. So another key point is this level here in 2018 August, around 18. These 2 points, resistant points that were in the past, can now potentially be used as points of support. So essentially, within this range between these red 2 lines, buyers could be coming in, and we've actually seen that in the chart on a weekly level here. So in the past 4 months, buyers have actually come in. So if we go into the daily chart, what has been going on? Well, I've actually just drawn a simple wedge here, just to connect the lines and to see what price is actually doing. And what is price doing? Well, if we look at it, price hit the all-time high in 22nd of April. It started to retrace. It hit that support level at 18.9. And now we're actually looking to see whether the interest rates and the exchange rate breaks the wedge formation. Now, what we'll be looking for is this green circle here. If the exchange rate does actually look to break this level, the exchange rate potentially could mean on a fundamental level we'll be looking to long this position. That's something we're looking for right here. If it goes below this pink line, it might mean we're a little too early on the idea, and it might mean that we'll have to wait a little bit longer to see if the fundamentals are correct or not. So that's it on a technical level. If we go back to our analysis here, we've actually identified a couple of things as well. So this is it here. On the lower time frames, there was a morning star formation being made in June. So if you don't already know, one of the morning star formations on a daily level is quite a significant indicator of a long position. So that's this pin bar here, followed by a massive bullish engulfing candle. So this one day on the 11th of June engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9 days worth of selling. So 1 day worth of buying engulfed 9 days worth of selling. And it shows the buying power at this level. Again, we've got our eyes keen on this level. We're going to see what happens, and if we do get the opportunity to rise, I definitely think this is one where we could be in for a large trending movement. I've actually calculated based on volatility a few statistics on what potentially could be happening. So on our long calculator, I'm actually going to release a video on this on how you create stop losses and targets based on volatility of assets. But the current exchange rate was about 19.2, which gives us a stop loss of 18.5 on the exchange rate. Now 18.5 is about here, so about here. So I'm going to put this in the stop loss area. 18.5, something around there, this green line. This would be our stop loss. Now our target would be 21.3. If we copy and paste this line, 21.3, where is that? Again, that's all the way up here. That means it's potentially breaking all-time highs. So if I put this in a different colours to make it easier, put it in white, and I'll put this in red. No, I'll put it in yellow, so it's a little bit different. Current prices at this green level here, a 3% stop loss based on the volatility asset would create a stop loss of 18.5 just around down here and a target of 21.3. Now, assuming this wedge formation does show buyers coming in, it could potentially be a great opportunity to get on this trending movement, because this exchange rate of 21.3 is actually plausible of being hit due to the fundamentals, due to that risk-off environment going on, and I definitely think it's one to look out for and be on your watch list in the future. That's basically my overall run of the analysis. If you haven't already attended our fundamental webinar on how to actually calculate some of this fundamental stuff, how to actually use this fundamental system in your trading, we've got a free fundamental webinar link in the description below. It'll look something like this. You can basically click on this link below, I want to learn to trade, and it'll book yourself a free spot on our fundamental webinar. It's an ongoing webinar. It's pre-recorded for you on one of our previous ones, so it makes it much more easy for you to attend and take it in your own time to make the notes that you need to make. To book it, all you need to do, put your email there, reserve your spot, you'll get sent that link straight away. Again, if you want to understand how to use the COT indicator as well, we have a link in the description and in the blog post on using the COT report in Forex trading, one of our best Forex trading strategies on this guide, and it'll teach you step by step how to actually incorporate the COT indicator within your analysis. That's it for that. What about our currency strength meter? A lot of people are interested in our Logikfx macro currency strength meter, and that's something that we in our hearts love at Logikfx, because it saves our traders so much time and it makes things so much more simple for our traders, and it actually identifies on an economic level if currency should be weak or strong in the future. So if you're interested in that, definitely book a spot in the webinar. You'll see exactly what this currency strength meter is about, and you'll see if fundamental trading is for you, because definitely we've had loads of people come in from a technical level only. They're interested in fundamentals, they don't know where to learn, but they've come to us and they're loving it so far. It's definitely a fresh new thing for them to learn, and it's nothing like you've seen elsewhere. Thanks for watching the analysis. Hope you found it quite useful. It's a bit of my insights on what's going on, and definitely take this with a pinch of salt and analyze it yourself. Keep on track of it. Keep on track of the indicators I've mentioned. See what factors you could even implement yourself. Technicals. These are just my technical outlooks. See what technical outlooks you could have as well. See what fundamental outlooks you could include. See what sentiment is saying. And just keep a track on it week by week, because this is my fundamental outlook, my price outlook, my sentiment outlook as of this moment. But this moment could change in the future. That's why it's really important to monitor what's going on. Thank you so much for watching. Do make sure to subscribe to our channel. It really helps me keep pumping these videos out for you guys. And also, remember, if you need to book your seat for that webinar, definitely give that a try as well. Thanks for watching, everyone. See you later. Like, subscribe, comment on the video, all that good stuff. Thanks for watching.